All right. Hey, everybody. Welcome to the February 26th MakerDAO community call. My name is David. I do community development at MakerDAO. So I run these calls sometimes. And if you're not familiar with what this call is, we basically go over the last week in the MakerDAO universe. So we go through everything from real life events, technical milestones, notable things that might have happened, partnerships, even new hires. And then we also go through some highlights from the community, and mostly we get these from Reddit, from our Rocket chat, even sometimes from Telegram. But usually, if it's on Telegram, if it's good, it'll trickle down into Reddit. But a lot of things we cover in this call, and so I'm gonna go ahead and get started by actually giving it over to Lenka to let her talk about some of the events that are going on in Europe this week.
Hey guys. Yeah, I was hoping I go a bit later because I was trying to prepare. Anyway, so do we also do a recap of the past week?
Yeah, we
or
can.
are you gonna do it? You're welcome to do it, Denver. You are there, so I won't steal that one from you.
I did the recap of ETH Denver on last week's call, so I think it's okay.
Oh yeah.
Yeah.
Okay, true. I missed that.
Yeah.
Anyway, so yeah, I just returned from Denver, and there's already super eventful week ahead of us. We will have a meetup tomorrow in London, organized by ETHFinex, where we have our Chris Bradbury from the product team to speak about Maker. So I'm really excited about that. Unfortunately, I won't be there, but if you guys will be there, then please make sure to join. I think there were a couple spots available via Kickback left. Then on Thursday, we have our head of integration, Lasse, speaking at FinTech Disruption Summit here in Copenhagen. So I'm really excited about that one. And I was basically planning mostly for next week because, as you know, next week is ECC in Paris. There's also entire blockchain week around it. We will have 4 speakers at ECC. I'll be there as well. So if you're in Paris, please reach out. I'll be happy to get to know the community in person. So we'll have Ashley talking this stuff. We'll have Gustav. We'll have Jacek from he's our legal counsel to speak about the crypto and legal stuff. We'll have Martin Lundfo talking about, I guess, formal verification and that part. And I'm also still working on some meetups happening, so I'll update you later on. I think that's like a recap from what is happening the next couple of days for me.
Nice, thanks, Lenka. That's great.
Nice.
Mariano is traveling today, but he doesn't have anything particularly new. We already covered it last week, but the first week of April, there's a couple of things happening. There's a Guadalajara Maker meetup in Mexico on the first week of April. There's also a UTN La Plata Blockchain Congress at the end of April, also South America. But I think there's more stuff going on in South America. I just got to get Mariano to get on the call and tell us himself. But hopefully next week he'll be on. That's pretty much it. I don't see any new updates from our team in Korea or Asia. So that's pretty much it. And as Blanca mentioned earlier, we actually, a whole bunch of us, maybe like I think 15 to 20 of us were at ETH Denver, which ended last week. And that was a really, really great conference. There was a lot done. And if you're curious about some of the stuff that happened, definitely check out last week's community call because I covered just basically everything that went on in ETH Denver. All right, so that's it for events. I'm going to move on to some of our new hires. So this week, it was announced that we have a guy named Kurt joining backend services from Washington State. So we're getting even more distributed. Washington State. Woo. All right, so that's it for new hires. We also have an updated white paper. So Rune put out an updated white paper for single collateral Dai. If you're curious to read about it, you could just go on our website or just go on Reddit. It's the sticky, that's like the one sticky thread there at the moment. So you could check that out. In other news, we also partnered with, I think it's called, well, the project itself is Factor 805, but they're part of like fluidity, I think. So they're like a real estate uh company that they're doing like they're raising private equity with Dai, and like they're doing this really interesting sort of credit tranching structure. I only read about it briefly, so I'm not a professional in explaining how it works. But if you're an accredited investor, I believe, and you're able to participate in their Factor 805 like fundraiser, like it's a development in Brooklyn, and you can invest using Dai. And I think there's like 5 or 6 different tiers of investors, and they have a whole thing going on. So definitely check it out. And I think that our very own Jess Salomon is going to be on a panel talking about that. I don't know when the panel is or if it's going to be recorded, but I know she's doing it. So look out for that if it's going to be around on Reddit. Next, we have the live proposal for the stability fee raise from basically 1% to 1.5%. So the vote for that started on the 22nd of February, and it was passed on the 23rd with about 90,839 Maker in the proposal at the time that it passed. And since then, another like 20,000 Maker has like joined that proposal. So the new rate was changed on the 23rd to 1.5%. And if you guys, I know a lot of people ask about whether or not like this rate applies to all CDPs. I just want to like reiterate, yes, it applies to all CDPs, and no, it does not like override your former rate. So like if you're paying 0.5% for half a year, you still paid 0.5% for half a year. But the second that 1% or 1.5% or any fee change happens, it's at that point that you start paying that new fee. So uh, it's very kind of fluid like that. I see Lenk is posting links for the events in Europe in the chat if you guys are interested in that. But okay, so that's it for the governance vote that happened this week. There's also a post on Reddit by Rune reminding everybody about the foundation proposal. So the foundation proposal was like the first governance vote that we really had on the vote.makerdao.com like governance dashboard, and it was to basically unite the community under like these 5 core tenets, which were scientific governance, which is the idea that like any decision made by MKR holders in the MakerDAO system should be based on like as objective reasoning and as scientific reasoning as possible, basically to never get things convoluted by like subjectivity and like faction wars and all that kind of stuff, but everything should be very like quantitatively and qualitatively assessed, and decisions should be made super carefully and on a scientific basis. We also have the second tenet of serving the underserved. So at Maker, like our one of our biggest core values is basically banking the unbanked, giving people access to the financial world, giving people the ability to be financially included through the use of like digital currency like Dai. Also sustainable finance, which speaks for itself, and then gradual decentralization, which is the fourth core tenet, and that is just simply the foundation's dedication to like unwinding itself and giving itself less and less influence and power as time goes on. And I think that's also coupled with like spending the development fund within like a very reasonable period of time. And then the fifth tenant is driving Dai adoption. So like one of our biggest things is also just driving Dai adoption. We want people to use Dai. We want people to know about Dai, and we want it to be a public common benefit to anybody who is looking for a digital currency to use. And so I'm gonna post that there. If you're new to the community, definitely read the foundation proposal because it's very sort of like this keystone document that everybody agreed on and everybody is kind of like rallied around. And it's really great because if you think about it, soft consensus is really important in a system like ours, or in any governance system, really. So if we want to be united as a community, definitely uh, read the proposal, check that out. All right, cool. So that's pretty much it for the the more official stuff, I'm gonna go through highlights from the community now. And by the way, feel free anybody to stop me at any point if you guys have questions. I'm happy to try to answer any questions that you guys might have. All right, so highlights from the community. So there was a Medium post by David Hoffman, one of our awesome community members, about evaluating Maker, and this short post was about the buyback and burn model and how he sees that it changes everything. So definitely check that out. I'm gonna post that link in the chat. We also had oh, Kiva, yeah, go for it. So Kiva Dubrovsky has a question. If you want, you can actually get on the mic. Yeah.
Yeah, so I'm wondering if this community proposal where it talks about like banking the unbanked, I'm wondering if that means there will be less of a focus on like DAI as a money market for people who are trading security tokens, and also like people like TradeShift or entities like TradeShift and Wall Street and all that. So is that less of a focus for the team?
I think that so to answer that, I think that there's a few different focuses. Like number one, like Dai has to kind of scale, right? And for it to scale, it has to have the participation of like the money markets and like, that whole financial side of things, that whole institutional side of things. But at the same time, with our grants program, for example, or our meetups program that we're trying to launch, like there's a bunch of initiatives internally to drive like consumer Dai adoption, which is why we focus so heavily on like partnerships and integrations for like people like for people using like retail apps. We're really eager to try to find more places where people can like spend Dai. But yeah, I mean, I don't think that I think it's a fair balance, but I don't think you can have one without the other, really. Yeah. All right, cool. I hope that answers the question a bit. All right, cool. So moving on. So if you guys don't already know, on Thursdays we do a governance and risk meeting. And so very recently we had a couple of people from the community actually draft up notes and even like a highlights video of the recent call, and a few people are actually rallying together to consistently do like written notes around that meeting. So if you guys are curious, the GitHub repo is below. Yeah, so I think it's like quadratics, this guy just average, and I think actually Annette is also going to be helping with that.
Yeah,
But
I'm gonna help with the highlights as well.
yeah, so it's really cool because the governance and risk meetings are a lot more like granular level on things around like the hard governance of MakerDAO, like stability fees and collateral and like that whole scientific governance side of things. So if you guys are inclined, definitely listen, definitely read. We also have like a SoundCloud, we have a YouTube playlist. Actually, I'm gonna post it in the chat right now. All right, cool. Yeah. So before I move on to the next item, let me just read the chat. I see Jordan Crandall asked something. This was discussed in the chat, but I would love to see a little greater clarification on the relationship between the dev fund and the maker holders, since in some way the maker holders voted for the 20% principle, which is some influence over the dev fund, but I understand that can't happen on the spot during this meeting. Would love to hear eventually though. So the 20% principle was actually part of the first foundation proposal. But I think that there was a lot of like community. Not that I think that this was. There was a lot of community, like sort of disagreement about it. So it was actually taken out. So the version 2 of the foundation proposal that actually was passed didn't include the 20% principle. And if you guys don't know what we're talking about when we mentioned the 20% principle, this was simply part of the proposal that said, okay, we're going to take 20% of I think it was like the total maker supply, because at the time the dev fund was like, I think 37% of the maker supply. They're going to take like 200,000 maker and make it available for basically like a grant program slash just like giving it to people really aggressively to kind of grow the ecosystem out. So hold on. Jordan Crandall wrote, right, but I mean, basically, Rune was putting the dev fund forward to be influenced by maker holders. Not sure if that kind of thing will happen in the future. Well, from our internal, like from the communications with Rune, I think it's really clear that his intention, number one, he doesn't control the dev fund, right? The dev fund is actually like a multi-sig, and it's controlled by like several people in the Maker Foundation, and their goal is actually to aggressively spend it within the next 5 to 7 years, probably less, but they want full decentralization, and that's part of like that core tenet of gradual decentralization. And the dev fund being currently 200, around 270,000 Maker, I know that it's not used for voting. It's purely used for basically keeping the foundation running. But in the end, it's going to be distributed as like in as decentralized a fashion as possible over the next few years. I hope that answers that. Okay. Lawrence has a question. So Lawrence asks, Lawrence says he's still a bit confused about how often the stability fee will be changing moving forward. So I guess I could say a couple things about that, right? The number one reason why the stability fee has been changed so often in the last month even is because the Dai peg is consistently trading underneath $1. And that is like a really big issue because if you want to have like a stable coin, it should be stable. And if we're trying to peg it to the US dollar, we should be trying to keep that peg healthy. And so, with that being said, anytime that the rate actually changes, it is to that end. It's to create a healthier peg. And not only that, but if you take a listen to the governance and risk meetings, so everybody kind of agreed that we are going to be making 50 basis point changes fairly frequently until we could see how that affects the Dai peg, because obviously there's a lot of confounding variables. The peg isn't only influenced by the stability fee. So like, one example of a variable that's really important to consider is the appreciation or depreciation of the ether price, right? Like, so when ether price goes up, that means more people can actually mint Dai. So what is like, you have to consider basically a bunch of things, but you have to at the same time change what you can. And from the perspective of the maker token holder, that is the stability fee change, because that makes the supply side grow a little slower in theory. But yeah, so in theory, you could actually change the stability fee every hour if you wanted to, if maker holders were like organized enough. But at the moment, I think we're doing like weekly meeting, and then we're taking a look at the data, and we're seeing what each change does. And the fact that we're standardizing it at the moment temporarily at 50 basis points per change, it's just really to try to get the best data possible for how these changes affect the peg. All right, let me read the next comment by Jordan. Agree to Kiva. Just wondering because it is not 100% clear, but thanks, David. Sounds like maker holders will at least have some amount of influence over where some of this maker gets spent. But at the end of the day, it's the foundation that will make the decisions until the governance is a little more robust. Well, the development fund is sort of owned by the foundation, and it is their means of like fundraising to keep themselves afloat. So like we're already about 100 person, like we have about 100 people working to like bootstrap this MakerDAO, right? But MakerDAO itself really is the community, and the whole idea is, you know, ultimately, personally, and like this is just reflecting my view, not really the foundation's view, even though it might, right? But my view is that they own the dev fund, they could distribute it however they see fit. I know that the core sort of value behind distributing it is decentralization. So I kind of have full confidence that the team is gonna distribute the dev fund in like a good way. And yeah. So Getty asks how many people work full time for the foundation. I think between 80 and 100 people. I'm not really sure. But like between 80 and 100 people. Yeah. All right, cool. So I'm gonna move forward with highlights from the community. So there was a post on Reddit about what software development process does our development team follow, and Tom Smith, who is a member of our team, actually posted a fantastic and really comprehensive answer. Actually, Rune made it a point to create a thread and just permalinked his answer because it really is kind of great if you want a look into how development really works at MakerDAO, from like a from a philosophy perspective. All right. So another Reddit thread I wanted to kind of put out there from the community was that somebody posted 2 of the 14 price feeds are down, and they were basically saying how unreliable the system is because 2 of the 14 are down. That means like an attack is that much more easy to do, this and that. But actually, Nick, one of our core devs, pointed out that those 2 oracles were actually intentionally taken down, and they're in the process of like being transitioned to the new oracle system and the new infrastructure. So they're actually being tested for that. But I think they should be online. They should be back online pretty soon. So I wouldn't worry too much about that. And another thing that I saw actually this morning was a Medium article posted by Primoz Cordes, who's the founder of Block Analytica. And it was also about stability fee benchmarking. So if you guys haven't already noticed, the stability fee is a hot topic for February, because we really are, as a community, trying to understand how it should be controlled and what we should be looking at when making the decision to change it. So definitely read that article. I haven't read it fully yet, but anything that you could read from any perspective is great. So Lawrence asks, how come this was not communicated beforehand in regards to the oracles being taken offline? So likely it's probably because, if you have less attention on it, probably, you're gonna not really notify somebody that we're a little bit more vulnerable to an attack. So like the oracle system in general, in my opinion, is pretty great in the way that it works, but Uh, again, I don't really know how to answer that question personally. I'd probably love it if like Nick was here, but he is not here to answer that. But yeah, I think it's probably like a security ops thing because if you make an announcement, hey, we're taking 2 of the 14 oracles offline, you might have like some sort of subset of people that are like, oh, how could I use this to my advantage? So I don't think it was super. I don't think it would have been the right decision to like really make a public announcement about that. Yeah, they might be monitoring it anyways. Yeah, that's true. But either way, we still have 12, and for you to be able to actually manipulate the reference price, you'd need control of at least 6. And so, yeah. But the next Oracle system is going to be a lot better. Yeah, my pleasure. All right, cool. So that pretty much concludes all of the highlights from the community that I had on my list. If anybody else has anything worth pointing out that I might have missed from this week, definitely let me know. Feel free to actually like talk if you have a mic. But for the rest of the meeting, I'm happy to open it up to questions again if you guys have any more. But otherwise, that's pretty much it for this week. All right, cool. All right, well, it was a pleasure having you guys on this week. I will see you next week, and hopefully this week is going to be awesome. Take care, everybody.
Bye, guys.